Talk about a roller coaster ride this week in the markets. Amorite.
Yeah, tell me about it.
Our dedicated listeners know this, but for anyone just tuning in, the market's been on this climb, right? And get this, we're talking record-breaking territory.
Mm.
But it kind of feels like everyone's celebrating with, like, one eye on, I don't know, the emergency exit.
Yeah, I get it. It is definitely not your typical market behavior. This kind of sustained climb after all the ups and downs we've seen, it's making people wonder, right? Like, is this the real deal? Genuine optimism? Or are we all just riding a sugar high?
Right, because we're talking a new all-time high for the S&P 500, which, just a quick reminder, that's like a snapshot of 500 of the biggest U.S. companies. It's a
Right.
big deal. And it's not just the overall market either. Netflix, they kind of stole the show this week. I mean, their
Yeah.
stock, it went through the roof.
They crushed their earnings predictions, totally.
Oh, yeah, no kidding. We're not even talking meeting expectations here. They blew past them. Predicted revenue. Left it in the dust.
See, now Netflix is interesting because what they're doing, it tells us a story. A little peek into how consumers are acting right now. I mean, think about it. That whole ad-supported plan they rolled out seems like viewers, they don't mind a couple ads if it means saving some cash.
Makes sense.
But they're also brilliant, let's be honest, at keeping us glued to our screens with all that original content. And you've binge-watched something on there recently, don't lie.
Guilty as charged. But okay, so anyone with Netflix stock right now is probably doing a happy dance, obviously. But zooming out a bit, what does this tell us about the bigger picture? Like, are consumers just shrugging off inflation and splurging on entertainment?
It's definitely a piece of the puzzle. Earnings reports always are. They give us that real-time look into how companies are actually doing, not just like what we hope they're doing. And, even though the overall earnings growth estimates for the S&P 500, they've dipped a little, it's kind of wild. We're seeing a ton of companies actually beating those lowered expectations.
Interesting. So maybe it's not all doom and gloom like we sometimes hear. Sounds like there's some real resilience in the market right now.
You got it.
Mhm.
Resilience for sure. But we can't just ignore everything else going on. We could talk about oil.
Oh, right. Oil.
Yeah. Crude oil prices, they took a nosedive this week,
Yeah.
down to $69 a barrel.
Okay, wait. So cheaper gas. That's good for consumers, especially with inflation still sticking around like a bad smell. But if you're invested in those energy companies, that's got to sting, right?
Right.
So what's the deal with that? Is it a temporary blip or is something bigger going on?
That is the million-dollar question, my friend. See, this drop in oil prices, it could be a whole bunch of things. Maybe it's just temporary, right? Easing tensions in the Middle East, that could do it. But it could also be like a flashing sign,
Yeah.
a sign that global demand is shifting,
Mhm.
especially with China's economy not exactly booming like it used to.
So oil prices, China's economy, they're kind of joined at the hip, huh? And speaking of China, their growth this quarter, it beat expectations, even though it's still not as, what's the word, robust
Right.
as it has been. So for the average investor, is this something to pay attention to? Or is it more of a big picture global economics kind of thing?
China's economy is definitely something to keep tabs on. If you're not buying up stock in Chinese companies directly, what they do, it ripples out. You know what I mean?
Mm.
When the world's second biggest economy sneezes, everyone's grabbing a tissue. It's a big deal.
Makes sense.
But here's the thing. Even slower growth from China, it can actually be a good sign for the global market.
Really?
Yeah, because think about it. It could mean they'll start rolling out those stimulus measures, right? And that can impact markets everywhere, not just in China. It's all connected.
Okay, yeah, that makes sense. So we've got consumers still out there spending. Companies are mostly, what was the word? Resilient, defying those lowered earnings expectations. And China's economy, it's not down for the count just yet. But what about the Fed? That feels like the big one, right?
Yeah, the Fed's always looming large.
Right. Everyone seems to think a rate cut is a done deal next month, even with those strong retail sales numbers we talked about earlier. Honestly, I gotta say, I'm a little lost on this one. Why is the market so sure about a rate cut right now, especially with all these other positive signs in the economy?
You're hitting on something really important here.
Right.
This is the Fed's constant struggle, right? They're trying to walk this tightrope, keep inflation in check, but also not slam the brakes on the economy. It's a delicate balance.
Yeah. And just for anyone who needs a little refresher, when we're talking about the Fed cutting rates, we're talking about them making it cheaper to borrow money, right? Which is supposed to encourage spending and investment.
Exactly. So on the one hand, we are seeing inflation cool down, which is what the Fed wants, right? But then on the other hand, the economy is tougher than some people thought. like those strong earnings reports we were talking about. That's a sign that things are, still chugging along.
Right, right.
And then you've got someone like Atlanta, Fed President Bostic, right? He recently said that, maybe the Fed hits pause on the rate cuts, at least for a bit. And when he talks, people listen.
Yeah.
So it's kind of up in the air right now.
So it's a wait and see situation then.
Yeah, pretty much. And that's why it's even more important to pay attention to the signs, right? Like keep an eye on those upcoming earnings reports, especially from the big industrial companies like Boeing, Honeywell, Lockheed Martin, those guys.
Big players.
Exactly. Because how they're doing, it can tell us a lot about manufacturing, supply chains, the whole business investment picture. And that's a big clue about the overall economic health.
So industrial earnings, those are definitely on the watch list. Anything else we should be keeping an eye on?
Yeah, you know what else is always interesting? The housing market. Any big surprises there and, well, things could get interesting. But, okay, let's zoom out for a sec. Big picture time. We've got this market rally going on, new highs. Everyone's, like, feeling optimistic. But the question is, how long can it last?
Yeah.
Are we setting ourselves up for, a bit of a tumble?
Yeah, because valuations, and just a reminder for everyone, we're talking about how much investors are willing to pay for a company's stock. They're high right now. Combine that with like the overall good vibes, it does make you wonder if things are maybe getting a little too hot.
It's a legitimate concern. It's easy to get swept up in the excitement.
Right.
But
Yeah.
record highs, they don't last forever.
Yeah.
That's just like market gravity. And right now, what's driving things? It's this mix of like, actually good news, which is great. But there's also a healthy dose of what if. Like everyone's waiting for the other shoe to drop.
Okay, so let's bring this home. What does this all mean for like me, and I imagine a lot of our listeners who are trying to, not just understand the market, but actually make smart decisions with our money? It's easy to get caught up in the hype, but you also don't want to be left holding the bag when the music stops.
Exactly. And that's the thing. You got to tune out the noise. Don't let FOMO, that fear of missing out, make your decisions for you. It's all about knowing your goals, what you're comfortable with, your risk tolerance. That's key.
Easier said than done, though, right? I mean, everywhere you look, headlines are screaming about new highs, and everyone and their cousin claims to have, like, the secret formula to get rich quick.
Oh, totally. The noise is real. And that's why, you got to do your homework. If something catches your eye, a company, a sector, whatever, don't just blindly follow the herd. Dig deeper.
Yeah.
Understand what's actually driving their performance. Does it align with, like, your own investing style, your own goals? These are the questions you got to ask.
So basically, stay informed, be curious, and maybe resist that urge to, like, go all in just because everyone else is.
Exactly. Investing is a marathon, not a sprint. Right. Keep your eye on the prize, those long-term goals, and try not to freak out over every little bump in the road. And hey, never feel bad about talking to a financial advisor if you need a little help navigating the craziness of it all. They're there for a reason.
Great advice. Well, there you have it, everyone. Another week, another wild ride in the market, record highs, a little uncertainty sprinkled in, and a whole lot to think about.
For sure. But like we talked about, knowledge is power, right? When you understand the forces at play, earnings, global stuff, even the price of oil, it's like you can start to make sense of it all.
Love it. So keep those eyes peeled, stay curious, stay informed, and hey, most importantly, enjoy the ride. That's a wrap on this week's Deep Dive. Catch you all next time.